We've got the rand weakening significantly as we head into the day, up about 7.48 at the moment, and that was after trading around 7.41 earlier in the session. And it really all seems to be about Greece at this point.
Yeah, once again, Stephen, Greece is in the international headlights at the moment. Once again, concerns over the Greek deficit and their ability to reel that in. We've seen Greek 10-year bonds trading a lot higher this week. Up, they're trading around 10-year yields of around 8.26%. That's up 2% over just over a month ago where they were in the sixes. So that is just showing how negative the sentiment is at the moment, and it is weighing across the world on both equities and currencies at the moment.
I'm not understanding what the issue is, though, because of course we had this meeting starting yesterday with the European Union, the IMF and Greece, and as far as I knew, those funds were available. There were emergency loans that were announced. $30 billion coming from the 30 billion euros rather from the European Union, another 15 billion available from the IMF. I mean, is Greece potentially going to default if it does have access to these funds?
The funds at the moment seem to be enough to sort out the short-term issues. I think the market is more concerned on the longer-term side, and that's why it's being reflected in the longer-term debt yields at the moment. I think it's also a way, it seems to be a way of the market almost punishing the situation at the moment and making their financing more expensive.
And do you think, like the issue over Goldman Sachs last week, that the dust will settle around this and we will see emerging market currencies and the rand regaining a firmer foothold?
Yes, I think it has to. At some point, this definitely needs to be sorted out and to clear up. And as a result, we should see a recovery in those currencies that have taken the most a negative reaction to this, such as the euro. And when that occurs, I think we'll see more strength in the rand as a result.
Well, at the same time, we had some quite good news coming out of the International Monetary Fund. It's upgraded its growth forecasts, not just for South Africa, but for the globe for next year. It now expects global growth to reach 4.2%. South African growth expected to reach 2.6%, and that was from 1.7% that it forecast last October. And even that 2.6% seems a bit pessimistic compared to what some of the market analysts are expecting out there.
That's right. The consensus is for it to be around 2.9%. Nedbank's figure, the estimate is around 2.8%. So it is slightly below the consensus. I think some economists perhaps underestimated the turnaround in the economy. So they're being more, perhaps a little bit more cautious with that number. But yes, it is good news indeed.
Of course, in that report out from the IMF yesterday, they also talked about a currency misalignment with emerging market currencies. And of course, that misalignment is currently being unwound at the moment, but it's likely to still be in the market. Is this an issue for emerging market currencies, that they are misaligned, that they are too strong at this stage?
Yeah, I think it certainly is a concern. Our own Reserve Bank has commented on the strength of the currency, and of course, there are good reasons for it to weaken off at a controlled pace. But yes, certainly they cited the strong rand, high unemployment levels and tighter credit in South Africa as being problems going forward for our growth.
Of course, we consistently see factors coming through that are helping to support the rand, and something that could support the rand going forward is the platinum price. We had it reaching a 22-month high earlier, $1,750 an ounce. And of course, as one of the biggest producers, that must be supportive of our currency, James.
Definitely, Stephen. Platinum being our highest export earner, we produce around 80% of the world's platinum requirements. And with the economic turnaround, the motor industry and also the Far East seeing platinum as an alternative to gold, demand is picking up. It's evident in the price. And that certainly will feed through, having positive effects on our own trade accounts and the strength of the rand. So that definitely is something to keep an eye on. It's evident also in some of the platinum equity prices as well. You can see those also will benefit from that locally as well. So it is certainly something we'll be keeping an eye on.
Of course, James, we have the Reserve Bank Governor Jill Marcus speaking at a conference here in Johannesburg this afternoon. And interest rates likely to be alluded to in that. Of course, we do know that the market is starting to price in the possibility of another interest rate cut. What's your view going forward from here? Could there be more interest rate cuts in South Africa at a point where many countries, India this week of course, are raising interest rates?
Yeah, the Nedbank view is certainly that we are seeing an increasing possibility of another cut either at the next MPC meeting or the one in July. Even though growth prospects are improving, we still are in a position of high unemployment, tighter credit situation, tighter retail sales figures we've seen over the past 5-6 months. So with the strong rand still being there, the window of opportunity is still there for a possible 50 basis point cut over the next couple of meetings.
James, where would you expect the rand to go from these levels? It has weakened considerably in the past couple of sessions. We were at 720 about a week ago. Do you think we'll get back to that 720? Do you think we're going to find new trading ranges here?
Yeah, we really are stuck in a range of 720 to 750. It's going to take something significant to push it out of that range. I do see that we're at the top of that band, with today's range probably being 745 to 755. I think ultimately we will see the rand strengthen back down to the levels of the 720s, but as I say, something significant will need to push us through that at the moment.
James, we have to leave it there, but thanks very much for your insights this afternoon.
Pleasure, Stephen.